Hey everyone, welcome back to Delta Edge, your ultimate destination for all things stock market. Today, we're diving into the exciting world of trading and uncovering the secrets of successful traders, tips and tricks. Get ready to level up your trading game as we explore proven strategies, practical tips, and real-time examples from the Indian stock market, specifically focusing on Nifty 50 stocks. Whether you're a seasoned investor or just starting your trading journey, this video is packed with valuable insights to help you make informed decisions and potentially boost your profits. We'll be covering everything from technical analysis and fundamental analysis to risk management and portfolio diversification, ensuring you have a well-rounded understanding of what it takes to succeed in the stock market. And guess what? If you watch this video till the end, you could get a surprise worth 21,000 rupees. That's right. We appreciate your time and engagement, so stay tuned for details on how to claim this incredible offer. Now, let's get started on our journey to unlock the secrets of successful traders. Trading in the stock market can be both exhilarating and challenging. It's a dynamic landscape with its own set of rules and strategies for success. But don't worry, you don't have to navigate these complexities alone. Today, we'll break down some of the key secrets that successful traders employ to stay ahead of the curve. Think of the stock market as a vast ocean, and successful traders are like skilled captains who know how to navigate its currents and weather its storms. They don't rely on luck or guesswork. Instead, they employ a combination of knowledge, discipline, and strategic thinking to make informed decisions. Let's dive into the first secret of successful traders, mastering technical analysis. Technical analysis is like reading the language of the market. It involves studying price charts and using technical indicators to identify patterns and trends. Think of it like this. Imagine you're a detective investigating a crime scene. You look for clues, footprints, and any evidence that can help you piece together what happened. Technical analysis is similar in that you're analyzing the footprints left behind by buyers and sellers. One of the key tools in technical analysis is identifying support and resistance levels. Support levels act like a floor, where buying pressure tends to outweigh selling pressure. Resistance levels act like a ceiling, where selling pressure tends to overcome buying pressure. Welcome back. Now that we've explored the power of technical analysis, let's delve into another secret of successful traders: leveraging fundamental analysis. If technical analysis is like reading the market's language, fundamental analysis is like understanding its underlying story. Imagine you're considering investing in a company. You wouldn't just look at its stock price, would you? You'd want to know about its business model, its financial health, its management team, and its overall growth potential. That's precisely what fundamental analysis is all about, digging deeper into a company's fundamentals to assess its intrinsic value. One of the key aspects of fundamental analysis is examining a company's financial statements. These statements, including the balance sheet, income statement, and cash flow statement, provide a snapshot of a company's financial health. By analyzing these statements, you can assess its profitability, liquidity, solvency, and overall financial stability. Key financial ratios, such as earnings per share, EPS, price to earnings, PE ratio, return on equity, ROE, and debt to equity, DE ratio, offer valuable insights into a company's financial performance and valuation. Welcome back to our exploration of the secrets of successful traders. In this chapter, we'll uncover the power of diversification. Think of diversification as not putting all your eggs in one basket. In the world of trading and investing, this age-old adage holds immense significance. Diversification involves spreading your investments across different asset classes, sectors, and geographies to reduce risk and potentially enhance returns. Imagine you invest all your money in a single stock, and unfortunately, that company faces unexpected challenges, causing its stock price to plummet. This scenario could lead to substantial losses, wiping out a significant portion of your investment. However, if you had diversified your portfolio by investing in a mix of stocks, bonds, mutual funds, and perhaps even real estate, the impact of a single stock's decline would be cushioned by the performance of other assets in your portfolio. Diversification helps mitigate risk by reducing your exposure to any one investment. It's like having a safety net for your portfolio, preventing a single mishap from derailing your financial goals. Welcome back to our exploration of the secrets of successful traders. In this chapter, we'll focus on the importance of setting realistic goals, a crucial element often overlooked in the pursuit of trading success. Think of it like this. If you're embarking on a journey, you need to have a clear destination in mind. Similarly, in trading, setting specific, measurable, achievable, relevant, and time-bound, SMART goals provides direction and motivation for your investment journey. One of the biggest mistakes novice traders often make is setting unrealistic expectations fueled by stories of overnight riches and get-rich-quick schemes. While the stock market offers tremendous potential for wealth creation, it's crucial to approach it with a balanced and grounded perspective. Successful traders understand that consistent, long-term growth is built on a foundation of knowledge, discipline, and patience, not on chasing unrealistic returns. So, how do you set realistic goals for your trading journey? Start by defining your financial objectives. Are you saving for retirement, a down payment on a house, your children's education, or simply growing your wealth over time? Once you have a clear understanding of your financial goals, determine your risk tolerance. How much volatility are you comfortable with? What level of potential losses are you willing to accept in pursuit of higher returns? Welcome back to our exploration of the secrets of successful traders. In this chapter, we're diving into a crucial aspect of trading that often gets overlooked: risk management. Think of risk management as your financial seatbelt in the roller coaster ride of the stock market. Just like you wouldn't drive a car without wearing a seatbelt, you shouldn't trade without having a robust risk management plan in place. No matter how skilled or experienced you are, losses are an inevitable part of trading. The key is to minimize potential losses and protect your capital from significant drawdowns. One of the fundamental principles of risk management is to never risk more than you can afford to lose. Before placing any trade, determine your risk tolerance and set a maximum loss limit that you're comfortable with. This limit should be a percentage of your overall trading capital, not a fixed dollar amount. A common rule of thumb is to risk no more than 1% to 2% of your trading capital on any single trade. Welcome back to our final chapter, where we bring together everything we've learned and apply it to real-time market insights. Now that you're armed with the secrets of successful traders, let's see how we can use these tools to analyze current market trends. The stock market is influenced by economic data, company earnings, geopolitical events, and investor sentiment. Staying informed about these factors is crucial for making informed trading decisions. Follow reputable financial news sources like Bloomberg, Reuters, and CNBC for real-time updates. Many online trading platforms offer real-time data, charting tools, and technical indicators. These platforms often have news feeds and social sentiment indicators for valuable insights. Consider both technical and fundamental factors when analyzing real-time market data. Look for stocks with strong technical setups and sound fundamentals for potential trading opportunities. Now, for the moment you've been waiting for. If you've watched till the end, you're in for a treat. As a token of appreciation for your time and engagement, we're giving away a surprise worth £1,000, 5 financial calculators to enhance your investing journey. That's right, we believe in empowering our viewers with the right tools for success. These calculators are designed to simplify complex financial calculations, helping you make informed investment decisions. To claim your surprise, it's simple. Just subscribe to our channel, take a screenshot confirming your subscription, and send it to us on WhatsApp at 9111-3211-1787. That's it. Our team will verify your subscription and arrange for the delivery of your financial calculators. Don't forget to like, share, and subscribe to Delta Edge for more insightful content like this. Hit the bell icon so you never miss an update. We are committed to providing you with the knowledge and resources you need to navigate the exciting world of the stock market. Until next time, happy trading.